MPC met on the 25th and the 24th and the 25th of September 2018 and evaluated developments in the global and domestic economic and financial environments in the first 8 months of 2018, as well as the outlook for the rest of the year. 10 members of the committee were in attendance at this meeting. The global development. The committee noted the uneven expansion in global output amidst growing trade tension, rising oil prices, and debt levels, as well as currency depreciation in most of the notable emerging markets and developing economies. These developments notwithstanding, there was evidence of resilient financial markets and output growth in the advanced economies led by the United States, which experienced sharp improvements in output growth. In the Euro area, United Kingdom and Japan, the pace of growth was moderate but steady, while in the emerging markets and developing economies, growth was sluggish and relatively uneven. Growth in the advanced economies was projected to remain at 2.4% in 2018, same as in 2017, led by the US, which grew by 4.1% during the second quarter of 2018 and is projected to grow by 22.9% in 2018. The Euro area and Japan, which grew by 0.4% and 0.7% respectively during the second quarter, and are projected to grow by 2.2% and 1% respectively in 2018. In the emerging markets and developing economies, and growth is expected to remain strong at 4.9% in 2018 compared with 4.7% in 2017. Growth in the emerging markets and developing economies is expected to be led by India and China, which are projected to grow by 7.3% and 6.6% respectively in 2018. On the average, the momentum of the global economy remained on track towards achieving the 2018 growth projections of 3.9%, as financial conditions remain broadly favorable, with limited spillover of trade tensions amongst the general political sentiments. However, the recent episodes of large-scale flooding in major areas across the globe could pose some threat to growth. Accordingly, the Monetary Policy Committee believes that rising oil prices, higher yields in the advanced economies, and capital flow reversals from the emerging markets and developing economies, resulting in pressure on currencies of some countries with fragile fundamentals, as well as growing tensions between the US and China, would continue to shape developments in the emerging markets and developing economies in the medium term. Domestic output development. Available data from National Bureau of Statistics, NBS, showed that real GDP declined by 45 basis points as the economy grew by 1.5% in the second quarter of 2018, down from 1.95% in the preceding quarter, but higher than 0.72% in the corresponding quarter of 2017. The growth slowdown was traceable to contraction in the oil sector in the second quarter of 2018 compared with the previous quarter. The committee noted that non-oil real GDP grew by 2.05%, reflecting the strong performance of construction, services, and agriculture, which grew by 7.66%, 4.19%, and 1.19% respectively. Furthermore, the non-oil sector was similarly supported by the stability in the foreign exchange market, continued implementation of the 2017 capital budget, and the ongoing interventions of the bank in the real sector of the economy. The MPC was of the view that even though growth remained weak, the effective implementation of the 2018 federal government budget, capital budget, and policies that would encourage credit delivery to the real sector of the Nigerian economy may boost aggregate demand, stimulate economic activity, and reduce unemployment in the country. Developments in the money and prices. The committee noted that relative to the level at the end of December 2017, broad money M2 grew by 2.98% in August 2018, annualized at 4.47% and below the provisional benchmark of 10.48% for 2018. The growth in M2 was largely driven by growth in the net foreign assets of 18.63% in August 2018, annualized to 27.94% and above the provisional growth benchmark of 18.15% for the year. Net domestic credit, however, contracted by 4.14%, annualized to 6.27%, in contrast to the growth benchmark of 12.45% for 2018. The contraction in the net domestic credit was attributed to the 34.68% contraction in the net credit to the government in August 2018. Conversely, credit to the private sector grew marginally by 0.81% in August 2018 from a contraction of 0.13% in July 2018, annualized to 1.21% against the annual benchmark of 5.64%. The MPC observed that despite the underperformance of key monetary aggregates, headline inflation year-on-year inched up to 11.23% in August 2018 from 11.14% in July 2018. The rise in headline inflation was from food, while core inflation declined, indicating that supply-side factors were driving the price increase. The near-term upside risks to inflation remain the dissipation of the base effects, expected 2019 election-related spending, continued herdsman attack on farmers, and the current episodes of flooding, which destroys crops and affect food supply and prices ultimately. In this regard, the committee urged fiscal authorities to ensure sustained implementation of the 2018 budget